Welcome to Big Deal. I'm Nisha Poddar. Now, today on the show, we'll focus on the diagnostics sector, which has seen an eventful last few years with many disruptions. But now, has it reached a juncture when it's lost its mojo? Or are we really going to see a reincarnation of the sector where deal making will also play a pivotal role? That's the question that we are asking. Let's find out from our expert panel today. Joining us on CNBC-TV18 are Anmol Ganjoo, the founder and managing partner at Shanika Capital Advisors, and Sanjeev Vashishta, who's the MD and CEO of PathKind Diagnostics. Thank you so much, gentlemen, for joining us. Now, Anmol, you had predicted long back that the good bull run that we had seen in the valuation of diagnostics companies listed on the exchanges will see a drop in valuation. And we have seen exactly that. What is your view on the sector and the valuations going from here on?
Hi, thanks for having me, Nisha. Yes, we did highlight a few risks earlier, which were there and which made for a perfect cocktail where valuations won't sustain. 6 months is a long time. A lot of the bad news is in the price.
Yeah.
However, whether we are about to see a gradual tick up in the operating parameters, I think there's still some time left. But obviously, a lot of froth, a lot of excesses, a lot of mistakes which investors typically make at the peak of bull cycle, they are clearly behind us. As investors and as industry participants, you have to be watchful now for opportunities more than risks, which is completely inverse to what the situation was 6-7 months back when we made the call that things are looking fairly shaky from a valuation standpoint.
So from here on, in short, you are seeing the valuation stabilize?
Not as bearish as we were 6 months back.
All right. So that's an important comment. So Sanjeev, you from the industry, and yes, you've been a veteran, you've headed SRL, and now you have a company which you have founded yourself. So what do you think are going to be the growth drivers and some of the big disruptions in the sector which makes you bullish about this space?
So Nisha, first of all, thanks for having me on the show. So I think just a small caveat here. I somehow don't like the word disruption, and I would rather use the word augmentation. But I think coming straight to the point, see, if you look at multiple parameters, whether we talk about the accession to test ratio, how many from one sample, how many tests are being conducted, or for that matter, how many people have actually given their blood for testing, or how many people are actually paying the money out of their own pocket for the healthcare requirements or even diagnostics. So all these things go in favor of the market really taking a good shape going forward. Whatever we have seen over the last few years and decades, actually, the industry has been growing fantastically. Just before COVID, the market went a little sluggish for multiple reasons. While the growth on the volume front was good, but we saw that on the revenue side it was low. But if you ask me, really, clearly the fact that government has got tremendous focus on healthcare now, the spend of the government, which is today 1.3%, close to about 1.3% of the GDP, is bound to go up to about 2.5% in the near foreseeable future. And as I was alluding to, accession to test ratio, which means from one sample in our country, we carry out just a little under 2 tests. And
right,
if you compare this with the advanced economies like the US, where this number is 15. So from one sample, we conduct at an average 15 tests. NHS in England, we do about 24 tests. Emerging economies like Brazil, we do about 10 tests from one sample. So it's just a matter of pulling the right levers. And if you are able to really convince the people about the importance of diagnostics, a stitch in time saves 9, why it is important to do the diagnostics from time to time.
Right.
It'll save a lot of money to the exchequer also.
Yeah.
So all this goes in favor of the growth. And of course, the macroeconomic parameters also quite favorable.
Right. So, Sanjeev, I'll ask you then on to this point. You're sounding very bullish, but many big players have entered this particular space. And do you foresee that there will be some cannibalization and consolidation, to put a better word for cannibalization?
So Nisha, I think there's too much of hyperbole which is created around consolidation. Look at the last 12 years data. Now, there are typically three segments under which the investments are coming in the diagnostic sector. One is the diagnostics chains, whether these are the organized chains, which is whether they are in the at the national level or the regional level. In FY11, the share of diagnostics chains was about 12% in the overall business. This has moved up to, over the last 11 years, it's moved up to about 16% now. Hospitals, which had diagnostic share of 35%, it has moved up to 37%, 2% gain. The standalone labs, which were about 53% 11 years back, are now 47%. So during the last decade plus time, we have only seen movement of 6% from this segment. And this is the most potent segment from where the consolidation can happen.
Right.
Given the fact that we have 125,000 labs in the country, and these are largely, the large section of this is more pop and mom shop. Is it really consolidable is the question we should be asking.
Right.
So organized sector being 16%, unorganized being the largest, the substantial part.
Yeah.
So you have to have a wieldy asset to be picked by somebody, who can make some sense out of it.
Right. So Anmol, we have seen some bit of consolidation. The two listed entities have both bought other smaller entities to really increase their reach. So some consolidation has happened. But to my larger question, Tatas have entered this space, Adani has entered this space, Reliance has entered, and even Torrent Pharma and Lupin. So there are many new entrants with many related kind of sectors. Do you think consolidation could be the theme going forward? And is it consolidatable? That is a question from Sanjeev.
Yeah, so to answer this question, we probably need to take a step back and see how the market structure has evolved. If you look at the top line growth for diagnostic sector in India, it has been around 11%, give or take a few percentage points. COVID has been a big accelerator of all the themes that Sanjeev alluded to. As I said earlier in one of your probably shows that, the diagnostic industry moved forward by at least 5-6 years in that 1 year, because a lot of critical drivers like home testing, going to established trusted players and not going to a local vendor, which kind of accelerated this whole theme from mom and pop to established sources. That happened. But we have to bear in mind, and I think Sanjeev also made that point, that there's a lot of hyperbole going around. All these buzzwords, disruption, home testing, etc., it is not something that has not happened before. Diagnostics is a very established industry globally, and the script that we are following in India is very identical to what has happened in the West when they were at this point of time in their journey. So, for example, if you look at some of the large players globally, like LabCorp, $21 billion, or Quest, they have also grown as a consequence of acquisitions. Now, it is going to be a combination of multiple moves. You're going to have inorganic moves that is largely geographically contiguous.
Yes.
But when players want to have a pan-national kind of an identity, they will have to go and pick up players. So, for example, if you look at Lal, they're now 24% West. That happened only courtesy Suburban.
Yes.
So similarly, if you look at Metropolis, they are around 28% South. That happened courtesy a string of acquisitions like High Tech in the South.
Yes.
So it will have to be a hybrid strategy. There is no one size fits all in this. And the fact is that we have to bear in mind that the industry requires very little capital to start.
Yes.
So there is a perception, and only time will tell whether what's the right answer to this. There's a perception that we can also go and try our hand, right? So there are very low barriers to entry given the low capital requirements, but as experience has shown that there are huge barriers to scale.
Okay, that's a very interesting point.
So there are low barriers to entry, but huge barriers to scale. And we have not seen players as fast or be as successful in creating massive scale, which then leads to operating leverage kicking in and a lot of other advantages kicking in as the street valuations were multiplying and as the excitement around 6-7 months were applying.
Right.
So this is, a pause, and I'm sure that industry players like Vashishta, Sandeep will will recalibrate and look at whatever the learnings have been in the last 6-7 months.
Right. So, Sanjeev, to that point, scalability. Yes, Sanjeev, scalability. Is that no entry barrier, but scalability, and that will come only with experience and with deep-pocketed players? What do you have to say?
Oh, absolutely right. See, that is the usual thought process, but our country is a little different. See, if I tell you that top 20 players in the country only have about 11% of the market share. Now, even if you consolidate everybody and create just one mammoth company, that mammoth company would not be even 11% of the total market. So, I mean, the whole thing is, howsoever deep pocket one may have, but the industry, can industry really support that? So my point is that what we have to see is that whether we are capable of creating multiple pies or trying to pounce on the same pie. I think we have to increase the market share. There is a dearth of quality supply of diagnostic services, whatever people may say. So imagine in a country with 125,000 labs, only 13,000 qualified MD pathologists, MD biochemists, and microbiologists. So is anybody thinking about the quality? Out of so many labs, only 1%, 1.5% are accredited labs. So all I'm saying is, if you have to give the quality, then consolidation may help to only, but up to a certain extent. You have to do a lot organically. You have to go deep down to the tier 2, tier 3 towns where you create nice labs which can really give the requisite services to the people.
Right, Sanjeev, well made that particular point, and that's where expertise of the already existing players probably comes in. So consolidation was one theme that we spoke about, but this particular space has seen a lot of disruptive new ideas in the shape of omni-channel approach as well. We'll slip into a short breather on Big Deal, but we'll come back and discuss more M&A and deal play in the space which have taken place and what is the trend going forward. Stay tuned to Big Deal. Welcome back. You're watching Big Deal, and we are discussing the deal dynamics in the diagnostic space. So, Anmol, we spoke about the valuations. Now, some of the recent acquisitions that were done 6 months prior, when diagnostic space was at its peak and COVID-19 situation gave it a lot of tailwind. At that time, it became expensive. IPOs also came at an expensive valuation. How have the matrices now changed in your view when you analyze these diagnostic companies which are going to define the future valuation?
See, a couple of things have happened. One big distortion which happened from a valuation standpoint was that FY21 and 22 became some kind of a basis. You know, whether it's the Suburban acquisition, to some extent some of the others. What happened was FY21-22, which had, you know, this completely Six Sigma event of COVID contributing meaningfully to top lines.
Yes.
That became some kind of a benchmark. And on those unsustainable kind of numbers, you got a revenue and EBITDA multiple.
Yes.
Now, obviously, you know, while that was happening, there were pressures on account of competitive intensity which were increasing.
Yes.
So going forward, you're going to have a challenge on the numerator as well as the denominator, which obviously is going to lead to a reset as far as specific company valuations are concerned. I'm with Sanjeev when he kind of points out that the long-term attractiveness quotient of the overall diagnostic space does remain intact. We still have a long road to cover when it comes to, you know, the opportunity size when we benchmark against West and some of the other players. But the fact is that this short-term disruption and aberrations in valuations, top lines, metrics, all created a problem. I think we are a couple of quarters away until the basis of at least the listed players settle down and they are able to kind of, you know, come to more sustainable revenue run rates, which will have only a very minimal, if at all, any contribution from COVID. And second is that, you know, a lot of the initial competitive impulses of the new players would have, you know, begun to come in play. And what also happens in this particular space is that, you know, diagnostics, what makes it so attractive is that it lies at, you know, the crossroads as far as healthcare, retail, logistics, consumer service is concerned. And therefore, a lot of companies think that they have allied competencies, right, which are the most important. And therefore, competition can come in from multiple directions. While it's true that, you know, the competency set is spread across industry verticals, but to bundle it and then launch a viable commercial proposition, which is also scalable, that's obviously a very different and a longer term game.
So the bigger question, and to the point that Sanjeev made on penetration, penetration will happen over time, Sanjeev. But what right now is really hurting the industry is the price war. So the margin is getting squeezed for all the players because there are so many new entrants, even hospitals, pharmacies, big players, everybody entering this particular space is disrupting the price, squeezing the margins, and therefore the profitability. What is the answer to that? How long do you think this is going to sustain?
Well, that's a $1 million question. But see, to my limited imagination, what I can tell you is that, people who have gotten easy money, I'm sorry for using this word. Some people I've seen in the industry, they are like onto the money burning mode. I think what one has to see is the sustainability of the business. The largest player's share in the market is only about 2.5%, 3%. So even if somebody by coming out with predatory pricing is able to become overnight the largest player, that would be just a speck in the whole universe. So I feel that it is very important to be a little careful on this side. Disruption, the ultimate is not disruption actually. I think aim should be how do we really make the services available to the people sitting at home. So yes. While certain companies are doing a wonderful job of making the services available right in the bedroom, the comfort of the bedroom of the people or the patients, yet at the same time we have to see the sustainability. If we are able to do the right job by making superior quality services available to the people on a sustainable basis, that is something good. Otherwise, what will happen is a lot of people are going to burn their hands, and the serious players who actually want to genuinely do something good, creating genuine value as opposed to just creating valuation, they'll die, which is not a good thing, So
right, yeah. So to that point, Sanjeev, consolidation by natural death is also a phenomena, and we have seen that play out beautifully in telecom sector, and the price war continued till we became like a 3-player market. So what is the end game is the bigger question. But let's jump to another big theme. That is the omni-channel theme that has picked up. Now, ThyroCare was bought over by PharmEasy. Now, the stock price of ThyroCare is much below the acquisition price, not making sense in the overall scheme of things, maybe in the long run. So, Anmol, what do you think about the omni-channel approach, and are there more such collaborations of offline, online and e-pharmacy to give that tech advantage to the brick and mortar diagnostics? Is there more to come and more to play out there?
There's definitely more to come and more to play out. There is going to be an industry evolution, and as the deal that you alluded to has demonstrated, that there can always be collateral reasons for someone to acquire. So from a unit economic standpoint, you might think that it doesn't make sense, but as a part of a bouquet, it might make sense for someone. But it's going to be a lot of hard work. It's obviously far more harder on the ground, which Sanjeev will clearly testify to, than when it is conceived in boardrooms on Excel sheets. Yeah. Some of these synergies will clearly take time to play out. But one important thing we have to remember, and this is to the example you gave of telecom versus diagnostics, is that telecom essentially was a very capital intensive business. And today, when we are talking of valuations having collapsed, industry being in a consolidation mode, we are still talking about 24-25% ROCs.
Yes.
I don't think telecom has made that kind of return on capital even in its peak booms.
Yes.
You have established players still making margins north of 20% at EBITDA level. That's when pricing is not offering a tick. So there is a lot of headroom that they have to kind of keep expanding, and for us to see that death leading to consolidation, or natural, this phrase that you use, I think we are some distance.
That won't be as critical because the debt burden and the leverage is not that high compared to the debt. Very good distinction made there, Anmol, and that's something to be also highlighted. But Sanjeev, do you think that the bouquet approach of omni-channel is the way to go, and would you also be banking on it in later times?
So it depends on the DNA. What is your DNA? Is your DNA diagnostics or healthcare or some tech platform? So if you have a tech platform, you can host any and all kind of services there. Be it, you can be into aviation business, into grocery, into retail, or whatnot, and you can host on that platform that you have. I think first and foremost, it's very important to be having the right kind of DNA for diagnostics and healthcare in particular. It's a very different animal we're talking about. It's not like any other business. Secondly, and certainly it's a very, very big comfort to the recipient of the services, to the patients. Because at one click you can have access to your telehealth, e-pharmacy, and e-diagnostics. But let's not forget that the curative segment in our case in diagnostics is 90%, where the wellness segment is only about 10%. So typically what we have seen is, by and large, the omni-channel players are targeting this limited segment of 10%. No doubt it's growing at a rapid pace of 25%, on the CAGR basis. Yet, I think what I'm saying is, the point I'm trying to make is that you have to have the right DNA for diagnostics. And as long as you are able to give accurate results and creating that accessibility for the people would not mind coming to you specifically, even if you're not into omni-channel. So imagine, so one thing one has to get right is, we are not living in the US. Every 100 meters, you'll have a chemist shop. Every 100 meters, you'll have a collection center or diagnostics player sitting there. So the point is, accessibility, by and large, at least in the urban area, is good. We have to go down to the tier 2, tier 3 towns with the labs, not just with the collection centers. So I think probably in the advanced economies where the labor is a major problem, perhaps omni-channel would work better out here. I think if you are doing a good job and your DNA is, as I said, healthcare or diagnostics, probably you can still, carve out a niche for yourself.
All right. So domain expertise, that's what you're banking on. But one very quick question, Sanjeev, very small answer to that. Any key trend you see emerging in the space going forward?
Well, multiple. If you talk about the short term, I think disruption is happening. A lot of discounts are being given. Clearly, I see that this is going to last for a few months or maybe a year and a half, after which the things should settle down. I'm hoping, because they're good players who want to do a good job, and ensure sustainability.
All right. So it will take some time for the dust to settle. Anmol, any final words on how do you see the sector going forward? Very quickly.
The sector is here to stay, and there was obviously excesses which get built during every peak of the cycle.
With everybody entering from hospitals to e-pharmacy to big players, do you think that is going to be sustainable and successful experiment?
Not everyone is going to succeed, but there are going to be a critical number of players. Next year, same time when we talk, probably you'll see the landscape having defined itself much better.
All right. All right. Thanks, Anmol. Thanks, Sanjeev, for your thoughts. So the headwinds, as far as the diagnostic space is concerned, is here to stay for some time. But there will be many, many new entrants as well as collaborations. And we have to see how they perform. And my big question would be, is it going to become, at a later stage, a big boys play with so many big business houses really making an entry into this space? With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.